What's going on? Welcome back to the channel. So today when I talk to you about Opendoor, I want to go over some of the data points, break it down on what the hell is happening, and go over everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So Opendoor is down 2.77%, 635 the low, 697 the high, and 62 million shares being traded. So today definitely did not play out how a lot of people thought, because Nvidia had home run earnings, and so people anticipated a massive run, which in many cases did happen. Just Opendoor lagged, and I think some of that has to do with a lot of the data that did come out. So we got a massive data dump. So non-farm payroll, unemployment somewhat mixed. So non-farm payroll came in at 119, forecast at 50, so that was epic. Unemployment though was a little bit hotter, so 4.4 versus 4.3. Plus you had a lot of initial jobless claims that came out because of the whole shutdown. So we got a massive data dump, and you even have individuals saying that all this data is a big mess. So it's really hard for the market to digest all of this, but I think ultimately one key takeaway is that consumers are still somewhat struggling. Specific to obviously Opendoor, existing home sales came in at 4.1, forecast of 4.1, and then same with the month over month. So definitely good stuff for that. Still though, you had one Fed speaker right here, Cook, signaling of a possible market drop because of high valuations on stocks. This is kind of the same warning that Powell had almost a month and a half ago. And if we kind of look, Cook historically is bearish, which rather comical, but nonetheless, this is one thing that really popped the optimistic kind of stance today. And so yeah, we're kind of regrettably pulling a little bit lower. One thing as well that did happen was just yesterday's crazy unjustified sell-off because of this right here. So we did get a Form 4 and a 144, so signaling the CFO is selling. I did a video yesterday on how Opendoor, all of this is technically Opendoor's fault. A lot of people are blaming like the CFO, but she sold for tax purposes. And it's unfortunately Opendoor that coded it as transaction code S, meaning it is a sell, not for tax purposes. Transaction code F is for tax purposes. So it's just very, very unfortunate. You can kind of see that CAS tried their very best to indicate, I guess they're putting that it was for tax purposes in the actual notes. But needless to say, I think it is just Opendoor really messed up by putting the wrong code right here. So it's not necessarily the best. Plus, you've seen CAS kind of going out and really talking about what is really coming for Opendoor. None of which I think is what's being stated is good reasons to buy. If you currently hold Opendoor and you're very bullish, it kind of reconfirms kind of what CAS and Opendoor is going to be doing, but none of which is good reasons, in my opinion, right now to buy. I think one thing that you really need is consumers and all that fear to really subside. So this is some of the things that's really affecting Opendoor, which is unfortunate, but nonetheless, at the time doing this video, shorts are increasing 183,000 shares, 20.88% of the free float is being shorted, works out to be 138 million shares overall being shorted. So shorts have been kind of playing their game, and so every time Opendoor does sell off, they tend to always return. That's why they returned almost about 4 million shares yesterday. So it's just a lot of crap and a lot of just back and forth, right? A lot of people are now bringing up how Opendoor is nothing more than a meme. So it's rather kind of just unfortunate. And again, going back over to Cook's warning about high valuations and stuff, that does directly affect Opendoor, right? Because technically, like, based on everything, as much as a lot of people think it's going to 82, aka Eric Jackson, it still technically does have a high valuation. But nonetheless, looking at the options, 3.4 million in calls, 1.4 in puts, and then 48% of all the options being done are bullish in nature. So despite everything, people are still remaining optimistic. From a bull standpoint, you see a consensus for it to be above 7. Bears are anticipating for it to be sub $6. These are so far the transactions occurring on the secondary market above $100,000. That is Resolve. This one right here is Opendoor. So this is why I always like to do these types of videos. Some people just say, like, you know what, it's just very repetitive. But for those of you that actually just listen to the true data, like it kind of signals very unjustified sell-offs. No different than yesterday, no different than today. If we actually look at the true data, it does signal that big money is buying the dip. This is the really unfortunate thing over the last several years, is that algorithmic trading has become extremely powerful. So if, let's say, AI is feeding off of the negativity in the market, unfortunately, it doesn't matter if institutions are buying, your stock is still going to go down. So if you like to follow what big money is doing, they are buying the dip. So you guys do with that information what you will. These are some of the transactions occurring on the dark pool. So big one, 13.7 million. So this was done at 9:30. So pretty much kind of the bottom. Downside of this and the dark pool is it's very difficult to tell what is a buy and what is a sell, because the whole purpose of the dark pool is kind of just stay anonymous, right? Right now with it, just looks like I was doing resolve, but right now with it exactly at 6:55, it is currently trading between these 2 points right over here. So trading between this S1 and this S2. So 638 is that next strong support, and it kind of bounced off that general area. So 635 is the low, then 703 is going to be that next strong target, and conveniently it kind of bounced off that general area. So it's just wedge bound between this S1 and this S2. Aside from all of that fun stuff on the actual chart, still not looking that great. I think, again, given everything that did come out, you had the market extremely optimistic that it was just going to cause a nice breakout, but just the circumstances just didn't really pan out. We are seeing a little bit more of a recovery, so it looks like big money is kind of disregarding Cook's comments and still starting to buy the dip. But one point to watch for is that 10-day moving average. So it's kind of wedge bound between that 10 and also the 100 right now. There really hasn't been that much in articles coming out associated to Opendoor. No analyst ratings. Looking at the market position, you see a little bit more willing, kind of not much activity. It's just more closer term kind of stuff. So I think those willing buyers are still sticking to where they are. Willing sellers are kind of sticking to where they are. So at the end of the day, I do believe NVIDIA's earnings is really a good testament on exactly what AI is doing, because at the same time, you've had a lot of bears saying that AI is just a bubble. And that does include Opendoor, right? Because Opendoor is very much using AI in order for them to kind of move to the next step operationally. So I think in general, NVIDIA and their earnings should have really pushed Opendoor and a lot of stocks higher, just can't control the feds. And I think based on the minutes that came out yesterday, like the minutes really did signal that the feds have no idea what the hell they are doing. So let me know your thoughts on Opendoor. Don't forget to hit that thumbs up. One final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades. Worthwhile to pop over there and check that out. With all that said, appreciate all of you watching.